Publicly traded companies maintain two sets of accounting records. One is for financial reporting and one is for tax reporting. This is a legal requirement of a publicly traded company. But what happens is it results in timing differences because of income taxes payable and income taxes expense. And the timing difference can result in this liability, which becomes deferred income taxes. Deferred income taxes are a topic for more advanced courses, but briefly touching on it here, discrepancies arise because of the two sets of records. Income tax expense and income tax payable are normally different because of the timing issues that may be different for tax reporting and financial reporting. In this example, there's no difference between the tax payable and the tax expense. This shows you the balance sheet and income statements sections when there is no difference. Companies may have commitments that involve large sums of money that will be spent in the future. It wouldn't be proper to record these things until they occur, so they must be disclosed in the notes to the financials. Leases are also a bit more complicated than the scope of this course. There are two types. A finance lease allows the business to own the asset it's leasing after a certain amount of time. Operating leases let the company use the asset without ever owning it. There are new rules going into effect for leases, and this slide outlines them. Ratios. We love ratios. Leverage ratio shows average total assets per dollar of average common stockholders' equity. A ratio of 1 would mean the company has no debt. The formula is shown here. The debt ratio is total debt divided by total assets, and then average total assets divided by average common stockholders' equity. Time interest earns shows how easily a company can pay its interest expense. The note section here explains the liabilities. GAAP encourages companies to report debt at fair market value, which may be greater or less than carrying amounts. And this shows the statement of cash flows, which we touched on briefly, and you'll study more in depth in Accounting 200 for Southwest Airlines.